Hey folks, Dan Frio here, the rate update. Today is October 12th, 2021. Woo, time's flying. Today we're going to talk about what's going on with rates, what's causing rates to move and do what they're doing. So don't go away. We'll be right back. Hey folks, today we're going to talk about what's affecting mortgage rates. Well, the news that came out today is a JOLT index, J-O-L-T. Basically what that is, the number of job openings there is. So we usually focus on how many jobs people are out of jobs or unemployed and things like that. But this index actually reflects how many job openings there is. So let Rick Santelli tell you a little bit about the numbers, and when we come back, I'm going to show you how it's affecting the markets. So don't go away. Take it.
Yes, JOLTS for the month of August comes in at 10,439,000. 10,439,000. And I guess what is noteworthy with this is that last month was originally reported at 10,934,000. It now leapfrogs to over 11 million. 98,000. And the reason that's important is every month this year, JOLTS has moved higher than the last. Now, this month, August, is a bit of a setback, but only because of the strength that we saw last month. And it really does beg the question, with between 10.5 and 11 million job openings, many of these, of course, anybody who's gone out to restaurant, service sector, hospitality, and leisure is where a lot of these openings are. It isn't a skills gap, and exactly what it is, we better get to the bottom of it. And here we see the markets right now. 2-year note yields hovering just under 34 basis points, 19-month high. 5-year note yields, 20-month high. But yet the long end is reversing off that super weak jobs report last Friday. Remember, bond market was closed yesterday. You want to really keep an eye on this. Call it stagflation, call it what you want, but with bond yields and gilt yields approaching, bond yields are approaching a 28-month high. They're at a 4-month high now, but they're almost as going back to May of 2019 like gilts. So we see Europe yields going up, our yields going up, and business activity a bit stagnant. Not a great combination. More.
Okay, so the unknown here is, okay, we have almost 11 million job openings, and we have about 7 or 8 million people that need jobs. So if you got that many openings and that many people that are looking for jobs, you would think it would go poof. Why isn't it? And that's a conundrum for everybody right now. Even Rick was saying it. It's like, why aren't these jobs getting filled? Are they unskilled positions? Well, no. A lot of it is in the restaurant and leisure and things like that. So basically, what's going on right now out in the markets? Well, the good news is let's see how it's affecting the markets as we move forward. So this is the news that just came out, and like Rick said, there are tons of people that are looking for jobs, but there are tons of people available openings out there. So look, employment vacancies fell to 10.4 million during the month, a drop of 659,000 from July, but of 11.1 million job openings. There's still almost 10. Well, there's over 10 million job openings. Okay, so that's kind of the, what's going on here? So let's see what's going on with the mortgage rates today. So this is the chart of the MBS market. Why do we follow the MBS market, and why do people follow me? Well, to follow this. So there's a whole bunch of different sites that you can go to follow the MBS market. What the MBS market is a bond that trades on Wall Street. That is the biggest piece of the puzzle when it comes to your mortgage rate. Throw the 10-year Treasury out the window. Throw the federal funds rate out the window. Throw everything else out the window. We want to monitor this bond because this bond is the biggest component of the mortgage rate. Okay, so we follow what's happening with its yield, but the number that's represented here, and I'll show you in a second, is what's happening to the price of that particular bond, and it is reflective right here. Okay, so just to explain this to you, as the price of the bond goes up, or is in green, that means the price goes up and the yield or the mortgage rates actually have an inverse relationship. So as the price goes up, rates come down. So we like it when the prices continue to go up. Well, for the last 2 weeks, we've seen this right here. It's a drop. Okay, so that means as this drops, rates go up. This isn't the rate chart, it's the price, what's going on with the prices. So the prices go down, rates go up. Okay, so that's what's happening right now. The trend was really steady for the longest time, and then all of a sudden, all this started to take place. Well, what is this? Well, the news of Fed tapering. the news of the Fed doing this, the news of the Fed coming out and saying that they have some people on the panel that might be in some troubles. Also, is our federal government going to default on their debt? A whole slew of things is coming in. And a lot of that is getting worked out. So as it gets worked out, I expect this to ease back up a little bit. That's why we're not locking in people. You can see today's 5 basis points moves. We locked a lot of people right in this time frame here before this debacle. If you've applied during this time frame, we are closely monitoring what's going on. So let's look at the news that we follow. And we follow the news why? Is what affects stock prices, let's say, or any bond prices. It's basically news. What news is coming out? So what we follow today is basically this. The news that came out today is the JOLT index. And as you just heard from Rick, the numbers are still staggeringly high, okay? But that's one of the things that the Federal Reserve is watching as well. But what they really focus in on is two things. They focus in on the producer price index, and that is coming out on Thursday. We as consumers and other economists, we follow the consumer price index as well as the PPI, the producer price index. So I might represent this as the consumer price index is the CPI, the producer price index is the CPI. Okay, the Fed monitors two things. So they have two major mandates. One is jobs at full capacity. So they monitor the jobs rates. So they're monitoring the unemployment rates, the JOLT index, and the employment numbers. Okay, so those are the things they follow there. On the inflation front, they follow the PPI, the producer price index. Okay, so just want you guys to know that. So we have a lot of this data coming in this week. So it's going to be an active week. You saw today, the JOLT index is there. And then tomorrow we have the CPI, all those numbers. And then the next day we have the PPI, and we have continued jobless claims and initial jobless claims. So that is going to be a major role in what the Federal Reserve is looking at this week. Okay, so how is all this playing in today for the day? Well, it's kind of a choppy day. We came into the market and we're up and down. These candlesticks, those are pretty substantial moves in the market. We usually don't see them that big. But the nice thing is we're starting an uptick into the day. So earlier in the day, we were down like 10 or 15 points on the MBS prices, and we've rallied. So this is a nice signal. So the first thing I think of, okay, what's tomorrow's news? And it's this information, the CPI. So that means maybe the Federal Reserve knows something, or traders know something that's going to be good numbers tomorrow. So that's my expectations there. Okay. So what I'm trying to do right now is break out my videos into two parts. So that it's not too time consuming at once. One is just going to be my mortgage rate update. And then another video that I'm going to show every day is basically about something: down payment assistance programs, housing numbers, how are my rates faring with other lenders in the market. So those things. So make sure you check out both of those. But those that follow me closely every day on mortgage rates, make sure you follow this one to find out where rates are going and why. So the next thing is I want to show you guys today is I used to do the rate update and show you my rates compared to national averages. So let's just check out the general rates for today, and then I'm going to show you some other information. I get this survey every day from Black Knight, and they survey mortgage lenders all over the country to give what their rates are on a 30-year terms, the 30-year conforming, jumbo, FHA, and VA. Those numbers are represented right here. We have had a move up. So the 1-day delta, 7-day delta, 4-week delta. Delta means change. So over the past day, rates went up 4 basis points. Don't go crazy yet, because 4 basis points actually equates out to 0.04. So not a major change. Where you're starting to see changes, though, is look at the week. Now we're about an eighth higher over the past week. Okay, and we're almost up to about 20 basis points on average over here for the month. So you can see there's a steady uptick, not huge, 20 basis points over the past month, but it is a steady trend up. And I see that continuing and maybe stabilizing here in the near future, but I can basically see rates stagnant right now because of all this. And there's, again, going back, the news that's coming out this week between tomorrow and Thursday, it's going to be some major news that might shake the market. So that's my mortgage rate update for today. So if you're out there and you're looking for a mortgage, or you've been in the process of a mortgage already and your lender sends you a loan estimate, please send me that loan estimate. I have a new email address down below that I'm going to share with you guys. And what I need to do is email your loan estimates to that email address. It's going to be me and my 3 assistants looking at those loan estimates and getting back to you guys to tell you what we can do. Maybe we can get you a better rate. Maybe we can waive some of your fees for you. Maybe we can put you in a better position. Or maybe we can put you into a better program that might save you, not save you money really out of the gate, but save you a ton of money over the long duration of that loan. So how to find out more about me and my team is please just go to therateupdate.com. And you're going to find that right here. And you're going to find a new feature we plugged in just recently. It's going to pop up here in a second. But how you reach out to us is go to therateupdate.com. You can give us a call at 844-775-LOAN. Or you can schedule an appointment right here. But a new feature we have that not a lot of people are using, and I'm surprised, is name your preferred rate. What are you looking for realistically? What rate could we offer you that would drive your business our way? So what you do is when this pops up, just click in, what is my preferred rate? What are you looking for? Just tell me what rate you're looking for. So let's say I'm looking for 2.99%. You click next. This is going to take you 30 seconds. Just fill in this data. We're not going to call you and hound you or anything like that. We're going to put this in our database. We're going to link it to our mortgage rate calculations or monitor. So if and when that rate hits where you're looking for your preferred rate, we'll reach out to you. So that's one of the features we offer here. The next thing is a lot of times you can't call us during the day because you're not available. Well, when can we talk? So how you do that? Schedule an appointment. Click there. It'll open up the days and times that we have available. Just find that day and time that corresponds with your availability. Let us know how you want to do this by phone call or Zoom. And on that day, at that time, we'll be reaching out to you to answer any and all questions that you got. So that's it for today on the rate update, guys. Hope you find value in this. If you do, please give me a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. I'll see you later. Bye-bye.